Hi, I'm here with Christopher Terry of iMarketsLive.com, and he has four key components to his trading style. He's talking about it here at the Traders Expo. Can you start with harmonic pattern structure? Is that what you're looking at?
Yeah, actually, yes. One of them is harmonic patterns. It was brought into the light back in the 30s and 40s by H.M. Bartley.
Sure.
He had it in a book on one of his pages, and in the late 90s, Larry Presavento brought it to the market. Him, Scott Carney, there was another gentleman, Bryce Gilmore, who had put together these patterns. It was originally the Gartley pattern,
right,
which branched off into the butterfly, the crab, the bat patterns, and basically there are key harmonic ratios of Fibonacci.
And this is for individual stocks, ETFs, options, what?
That's a good question. It's actually for stocks, it can be for options, futures, forex, any market that moves can use the structure because prices move in patterns. And basically it's just retracements or key ratios, Fibonacci, within a trend. Typically looking at a trending market. Sometimes it's also looked at as an Elliott wave, ABC corrective wave, where in the harmonic world they call it an ABCD. But basically it's just key ratios that form these pretty pictures.
And what are some of these ratios? I mean, what are you looking for? You're seeing a bat pattern or something? I mean,
yeah,
how do you treat that?
Like for instance, the Gartley pattern. The market will have an initial impulse in a direction, and then we'll see it retrace a 618 of that rally.
Mm-hmm.
The next, it has to hit that 618 area.
61.8%.
Yes. And then the next rally to that prior high has to fall within 38% to 88.6% of that prior rally, and then one more dip down below that 618 retracement we had, another dip down towards a 786.
And that's your buy point?
Yeah, and that creates an area to buy. Well, we basically look for a short-term entry to enter, but that's the area, the ratios, where you have from that initial low to that prior low to that low that just was made at the 786. That creates this harmonic ratio.
So you've got harmonic ratios, Fibonacci numbers, and Elliott waves. There's a fourth component. What's this market geometry mean? How does that work?
Well, actually, the market geometry is the structure of, let's take a downtrend. The market has a high, it goes down, comes up, gets a lower high, makes a lower low, makes a lower high, lower low, downtrend. When I look at market geometry, I look at symmetry or clustering. That's one of the components. Is we'll take that high, and then we'll take each of those other highs and draw a retracement from the exact low up. A lot of times you'll see the larger time frame may have a 38% retracement, where these other prior lows may have a 50 or 618, and it'll cluster. It'll look like little areas of clustering.
And that's your support level.
And that'll be a resistance on a retracement.
Okay.
So that's clustering. That's partly the market geometry, which also is tied into the Elliott wave, the harmonics. Essentially, if you have multiple areas that relate, there's enough binding geometry that the market can find a support or resistance. Along with, when we also look at prior swing highs and swing lows, if there's a swing high and we're looking for a short, we have to respect the prior structure of the market.
Right.
Not just use numbers. We have to,
look at the chart.
Yeah,
make sure the geometry lines up with the chart.
Yeah, you have to look at the prior structure. We look at market profile or overlapping data. Yeah.
Great. Thanks very much, Christopher. Thanks for joining us.